get into some technical analysis now with a focus on major currencies ahead of the non-farm payrolls later this week. Nick Twidale from ATFX joining me now. Nick, in terms of what we've been seeing, again, it's still this dollar strength when we're looking at market action.
It is, yeah. It's the old adage, isn't it? Buy dollars, wear diamonds.
Yeah.
I think there's a lot of concern, and it's hit stock markets as well, that inflation is going to come through. And we've seen, I think the crucial thing, and it's only the first few days of the trading year really, but we've seen data backing it up now. So the ISM PMI that came out early in the week, some of the jobs numbers, they've been a little bit mixed last night, but I think the concern for investors now will be to see if inflation is going to come through even before the Trump government comes in. And react accordingly. And so we are seeing US Treasury yields push much higher to the top side, especially on the longer dated. And that's leading to dollar buying across the board. And I think we're hitting some key technical levels soon that could see big breaks in the coming months.
All right, well, let's have a look at the Aussie in particular. And I mean, we're looking at retail trade today. We had CPI yesterday. What sort of levels are you watching here?
So as you can see, we're sitting on these support levels that came in with the lows that we saw at the end of last year and early this year, and we're not far off them. We're only about 30 points away, and it really is struggling to bounce too high, even when the dollar's getting sold across the board. So if we do see a break of these recent lows, it probably opens the way for a move down to 60 cents relatively quickly in the next sort of few weeks. But a lot will depend on what goes on in the US.
Yeah, absolutely. Okay, well, let's flick it to the hourly chart here and looking at those levels there, and that green line, my eyesight failing me, but just about 62 cents, right?
Yeah, that's why I brought the glasses. Yeah, that's the 200-day moving average on the hour. It's not normally as important on the hourly, but it has, as you can see, it has had some significance on the way down, and it struggled to get above there since it broke down again yesterday. That probably shows even better from an hourly perspective, and that's what we use to try and trade on an intraday basis. If we do start to motor underneath 62 cents, then I think it could break those lows and it opens the way. It would probably go with a move in the other majors, so euro or cable or dollar yen, but it really is struggling, the Aussie. And I think the CPI data, even though that headline number was slightly stronger, the trim mean, which is what we're probably paying a lot more attention to, was lower. And I think that's why we saw initial selling in the Aussie.
And it's not just our inflation data, we've got Chinese CPI as well. And it looks like the Kiwi is kind of on the defensive here.
Yeah, I threw a Kiwi chart in today as well, which I don't normally do, but it has really struggled, the Kiwi. And that's a much longer term chart. That's the daily. As you can see, we're not very far off those sort of fairly historic lows from Q4 2022, and a break there really does open a way sort of for much bigger moves for the Kiwi. So not great for Kiwi bulls either. Yeah.
What are we seeing with the euro?
Euro, it's a similar pattern for everyone. Yeah. This is the longer dated chart, and I put that because start of the year. We've seen that dollar resurgence, from sort of October, and then post the Republican win and the Trump White House. We're a matter of days away, really, aren't we? And as long as he doesn't say anything else too dramatic in the next couple of days, it does feel he's being very, very strong on that tariff proposition, and that's led to a lot of the dollar buying. And I think probably even before he gets in, we will see a key break in some of these technical levels, just because there doesn't seem to be any respite for the other currencies with the dollar just surging higher.
The yen, a 6-month low when you say no respite. Japanese officials here warning on speculative moves. What are the technicals showing us when it comes to yen?
Well, I mean, once again, I sort of did a bit of a review the other day, and it was probably the most volatile in 2024, and it's probably lined up for the same in 2025. BOJ will have an effect on dollar yen this year. It did last year. As you can see here, it's sort of bouncing up onto those. This is dollar yen going higher, so yen weakness. If it breaks through there, it does open the way back to challenge those sort of recent highs that we had way back in July, which is up at 162. We're only 3 big figures away, which is, as you and I both know, can happen in a matter of minutes. Absolutely. In the dollar yen. So it's going to be very interesting. I think volatility will be high for dollar yen in the next few weeks as we see what pans out in the US and with Japanese officials already concerned with levels.